Hello, Ricky. This is Dennis Tyler over at Capital Financial Mortgage. Ricky, you mentioned the last time we were talking that you're having a hard time with some of your listings. They're just not selling and not competing well in some cases with the huge amount of inventory on the market of short sales and foreclosed properties. I wanted to share with you a little strategy to help you and your sellers get your homes sold much quicker. And so the next few minutes, that's what I'm going to do, is show you some of the things that may be helpful to sell those homes a little faster. The biggest problem today is that we do have, as I mentioned, a massive number of homes for sale. And then the second problem is just the qualifying criteria. Over the last 2 years, lenders have tightened up their guidelines so much, and they're so rigid that many buyers just don't qualify anymore. And so we have to make sure we count all of the income possible in order to get them qualified. And so the solution to that is that we need more buyers. We need to attract many more buyers than what your competition is attracting. Ricky, I've got just the way to do that. The key is financing. If we have the proper financing available and focus on financing, you're able to attract a whole lot more buyers than what your neighbor down the street may be attracting, even though it is a short sale. Here's one of the strategies that I use. Let's just say that your home there on 123rd is listed for $495,000. You also mentioned that they're considering reducing the price, the listed price, just to get their home sold faster. Well, let's take a look at it, though. Based upon the terms right now where the home is listed, the purchase price is $495,000. We're figuring a 20% down payment, although this strategy works with much lesser down payment as well. The loan amount in this case would be $396,000. It's a 30-year fixed rate conventional loan program that we're looking at. Interest rate would be the 5.25%, fully amortized, with a monthly payment of $2,751 a month. Income to qualify for that new buyer, though, is $82,552 a month. Now, let's take a look at another option. Because of the market, what we're finding is that many buyers are lowballing. They're coming with low offers, and the listed price actually is being reduced by 3 to 5% in order to get a buyer in there. And so in this case here, I just figured about an $18,000 price reduction. I think that's pretty close to what you said your seller was considering reducing his price. Again, the 20% down payment. The loan amount now is $381,000 instead of $396,000. It's still a 30-year fixed rate conventional mortgage, and the interest rate still at 5.25%. Fully amortized. The new payment now is $2,672, and so they save just $79.52 a month. Not much savings for a drop of $18,000 in the purchase price. And you'll see here that the income to qualify was $82,000. Now the new income is $80,000 to qualify. But let me just share with you one other strategy here. In this case here, we still have the actual listing price where you are currently, but instead of dropping the price by $18,000, what we have done is we have bought the interest rate down to 4.25%. And that's still on a 30-year fixed rate mortgage. Instead of 5.25%, going to 4.25% for the life of the loan. And in this case here, the loan amount is still the $396,000. Your seller did not have to drop the price at all. We've used the $18,000 to buy the interest rate down. The new payment is $2,513. They save a whopping $238 a month. That pays for the car payment. You'll notice here, I mentioned to you that it was difficult to get many buyers qualified. Well, in this case here, we needed $82,000 of income to qualify. Here we only need $75,000 to qualify for that new loan. It opens the door for many new buyers and many additional potential buyers to be able to get that financing. Now here's the three of them put together. The purchase price at $495,000, the reduced purchase price of $477,000, and then the new purchase price of $495,000, but with the interest rate buy down. You see here the income to qualify down to the $75,000, the $79 a month savings versus the car payment that many people have right there. And that's how you make the difference. You add value. You show folks how they can actually save more money on a monthly basis, and in the long term, a much better benefit as well, by doing the interest rate buy down instead of the price reduction, and it saves your seller a bundle of money at the same time. My point in case is that in order to get this same savings on a monthly basis as what we have with the 4.25% interest rate, the buyer would have to reduce the purchase price by $54,000. That means by your seller buying the interest rate down for the buyer, he's saving $36,000, getting a buyer that qualifies on $75,000 instead of $82,000 worth of income, and saves the $238 every single month. Ricky, a certified mortgage coach, is qualified to help. There are many other lenders out there. They don't have the tools and they don't understand the market. Make sure that you use a certified mortgage coach. This is one strategy. I'd love to meet with you and your seller, actually, and go through how we might be able to help them get that home sold very